Hello my guys, welcome back to the channel. If this is your first time here, you are absolutely welcome. In today's video, I'll be sharing with you 5 Nigerian stocks I believe have the potential to perform well in 2025. I'll also break down the key reasons why I think these companies are worth keeping an eye on next year. But before we jump into the list, let's set the stage a bit. The Nigerian stock market has faced its share of challenges in recent years. Economic uncertainties, currency devaluation, and changing policies have affected the market. However, challenges like these often create opportunities for companies that can adapt and innovate. Looking ahead in 2025, I see potential growth in key sectors like finance, manufacturing, and insurance as they adjust to the new economic realities. The stocks I'll be covering today are my top picks chosen for their potential probability, growth trajectory, and resilience in the face of these changes. Quick reminder, this video is not financial advice, so please make sure to do your own research before making any investment decisions. Now, before we dive into the details, do me a favor to hit that like button, subscribe if you haven't already subscribed to the channel, and I please encourage you to share this video to as many people as you can share it to, because it's going to help the channel grow and also make this video reach a broader audience. So share the video, and without much talk, let's jump right into today's video. Let's go. The first stock I have on this list is QTix, a leading cable manufacturer in Nigeria. This company has been a consistent performer in the manufacturing sector, and with infrastructure development being a priority for the Nigerian government, QTix is in a great position to thrive. The demand for high quality cables for electricity construction and industrial use isn't going anywhere. And if QTix continues to expand its operations and maintain its market leadership, it could be a strong stock to hold in 2025. Aside this, let's take a look at the nitty-gritty to understand the financial performance of this company. As of the moment of making this video, QTix is trading at 2 naira 40 kobo per share. In 2024, this stock touched an all-time high of 6 naira around middle of 2024 actually, before then crashing in price to the region of 2 naira. Historically, QTix is known for this type of explosive rise, and the region it is currently trading at is a very good entry point. Overall, QTix pays an annual dividend yield of 3.26%. It has a market cap of 16.91 billion naira, and I think the company has the potential to do really well in 2025. The next stock I have on my list is C&I Leasing, a Nigerian-based diversified company. The company is known for providing equipment leasing, logistics solutions in the form of car and marine vessels rentals, fleet management, and automobile services. Now, why do I think this company has the potential to do well? Let's jump into the nitty-gritty to find out. In January of 2019, C&I Leasing touched 9 naira per share. On the 25th of December 2023, it was trading at 5 naira per share, and right now, as I'm making this video, it is trading below 4 naira. Regardless, I think this stock has very good possibilities to print cash for investors. C&I Leasing has been growing earnings at an average annual rate of 6.5%. Revenues have been growing at an average rate of 2.6% per year. Return on equity is at around 2.9%, and it has net margins of 4.2%. Everything seems tight, but their Q2 results in 2024 caught my attention, making me know that 2024 would most likely be a good year for the company, and that might drive the stock price higher early in 2025. Well, in Q2 of 2024, C&I Leasing grew its pre-tax profit by 187% year-on-year to hit 505 million naira. This boosted their first half pre-tax profit to 1.16 billion naira, which is like 82% of the total money they made in 2023 in the full year. They made it in just the first 10 months of, or the first half of 2024, which is quite amazing. My major issue with the company is just that they have very tight margins and their debt profile is high. The company is so huge on using debt financing without really returning much, because of how tight their margins are. But really, I like the sector they are operating in. It is a sector that is pegged for growth, so I'm willing to take a bet on this company to do well. I think a 10% return from the company or higher than that looks ideal. The third stock I have on my list is UACN Foods, a company with a rich history and a strong foothold in Nigeria. They are a diversified conglomerate, which means they are pretty much involved in a variety of sectors like real estate, food and logistics. This diversification helps the company spread its risks across multiple industries while tapping into different streams of revenue. Now, let's dive into why I think UACN Food deserves a spot on this list. Looking at their Q3 and 9 months performance for 2024, the numbers show signs of a potential turnaround for the company. For Q3 of 2024, UACN Food reported a 24% increase in revenue compared to the same period in 2023. That's a significant improvement, showing that the company is growing its sales even in a challenging economy. Even more impressive, their net profit for the first 9 months of 2024 surged by 52% year on year. This means they are not just making money, they are also becoming more efficient at turning those revenues into actual profit for their shareholders. Now, why is this important? Well, it shows that the company is doing something right. They are either cutting costs, improving operations, or taking advantage of the new opportunities in their sectors. Now, here's the thing I really like about UACN Food. They operate in essential industries. People will always need food and housing, no matter the economic climate. That makes this company relatively stable and less likely to face extreme volatility compared to other sectors. What's the catch? UACN Food, like any other company, isn't without its challenges. They have struggled with rising input costs in the past, which could squeeze their profit margins. However, their recent growth in profitability suggests they are finding ways to manage this cost better. My take on UACN Food is this. This is a stock with a solid growth potential, especially for long-term investors looking to build a portfolio. While it might not really be a quick money maker, I think it is a strong candidate for steady returns as the company continues to improve its efficiency and expand its operations. Next up, we have Universal Insurance. Universal Insurance is a Nigerian company that specializes in non-life insurance services. This means they offer a range of products like auto insurance, marine insurance, professional indemnity, and even oil and gas insurance. But beyond insurance, they also have investments in property and asset management, which adds another layer to their business model. So why does Universal Insurance make this list? One is its strong growth in premium income. For 2024, the company is targeting a premium income of 20 billion naira, which is over 100% growth from the 9.3 billion naira they recorded in 2023. This rapid growth signals that they are aggressively expanding and capturing more market share. Secondly is improved financial metrics. Their total assets increased by 20% to hit 18.1 billion naira as of September 2024, while their shareholders fund grew to 12.3 billion naira. This improvement shows a stronger financial foundation, which is a positive signal for investors. Thirdly is focus on expansion. The company has been actively opening more branches to grow its market reach. As of now, they operate in major cities like Lagos, Abuja, Port Harcourt, and Enugu. Their expanding footprint should drive more revenue in the coming years. Then finally is the recent appointment of Mr. Japhet Ogueri Dudu to lead them. This particular individual is coming in with 3 decades, that's like 30 years of experience to lead the company. I think Universal Insurance is on the right path. Now, what is the downside? One challenge Universal Insurance faces is relatively low trading price of their stock. It is currently trading at just 0.55 naira, or let's say kobo, per share. This can be seen as both a risk and an opportunity. For long-term investors, it means the stock is undervalued and has the potential for significant upside as the company continues to grow. Now, this is my take. Universal Insurance might not be the flashiest company, but its steady growth and commitment to improving its operations makes it a strong candidate for a long-term investment. If you are looking for a stock with potential in the insurance sector, Universal Insurance is worth considering. Personally, I'm willing to bet huge on this company with what I'm seeing. Finally, on this list, we have Stelling Financial Holdings Company. They are the parent company of the well-known Stelling Bank, which many of us recognize. Sterling Bank operates in both traditional banking and non-interest banking sectors, making it a versatile player in Nigeria's financial industry. So why is Sterling Bank worth considering? Let's take a look into the nitty-gritty to understand and answer this question. Sterling Financial Holdings has shown solid growth this year. For the third quarter of 2024, the group recorded or reported a gross earnings of 237.2 billion naira, up significantly from the 151.9 billion naira in the same period last year. This is a growth of 56% year on year. This growth highlights the company's ability to adapt and thrive even in a challenging economic times. In terms of profitability, Sterling reported a profit before tax of 29.4 billion naira for Q3 of 2024, compared to the 17.8 billion naira in Q3 of 2023, a 65% increase year on year. Profit after tax stood at 27.4 billion naira, further cementing its strong performance. One standout metric is their earnings per share, which rose to 95 kobo in 2024, up from 57 kobo in 2023. This is a significant indicator for shareholders as it reflects growing returns on their investment. Now, what makes Sterling even more exciting is their diversification. Sterling Bank is involved in retail and consumer banking, trade services, corporate and investment banking, as well as non-interest banking through its subsidiary, the Alternative Bank. This diversification reduces risk and opens up multiple revenue streams. The outlook for Sterling Bank looks very promising. The company has demonstrated resilience in managing costs and expanding operations. Currently trading at 5.65 kobo per share, Sterling Bank represents a solid opportunity for investors looking for steady growth in the financial sector. It's one of those stocks you might want to keep on your radar. And that's it for my top 5 stocks to buy in Nigeria for 2025. Each of these companies has unique strengths and opportunities that make them worth considering, whether you're a beginner or a seasoned investor. Remember, investing is a journey. Always do your own research, evaluate your risk tolerance, and make informed decisions. The goal is to build wealth sustainably over time and not overnight. By the way, if you're a beginner looking to make more informed decisions and find good stocks like this, I have a short, straightforward course that would walk you through how I actually do my research to find stocks. So you can check it out in the link in the description. And if you found this video helpful, don't forget to smash that like button, subscribe to the YouTube channel, and turn on notifications so you never miss an update. Let me know in the comments which of these stocks you are considering, or if you have other stocks or you think might do well in 2025. And until next time, stay safe, keep investing, and as always, deal.